Hi guys. Look, a classic problem we're trying to help you with is to know what positioning looks like in a market. Let's say the South African local rates market. This is how I suggest you do it. I recommend you go to the country you're interested in on the Trounceflow app. For example, South Africa. When you land there, you're going to be shown the allocations of an important subset of the overall investor base. You're going to be shown the allocations of those foreigners who are dedicated to emerging market local currency sovereign bonds. And whilst the black line shows the benchmark that they're managing their money against, it's JP Morgan's GBI EM Global Diversified, the blue line shows you what you get with Trounceflow. And what we're finding is that as of the end of May, not so long ago, in a really large sample, the average allocation of the typical GBIM fund was substantially overweight. We can see that in absolute terms and in relative terms. And in fact, this relative chart on the right-hand side makes it clear that for those dedicated investors, they've basically never been this overweight. They've been building their positions, the market's been rallying, they've never been this overweight. So it's a real kind of warning sign that this could be a market where, on average, everybody's overweight. We certainly know of the foreign investors, those dedicated to the asset class certainly are. If you take a look at how they're positioned in FX, it is a different story. They are much closer to the benchmark. They are increasing their positions recently, but from an underweight standpoint. So it's really on the rate side that the overweight is most obvious. I'm just going to quickly flip past the hard currency allocations and the EM corporate allocations because it's the local market, local rates that I'm focusing on. Now, dedicated investors are not the only foreigners in town. There's plenty of other foreigners that hold South African government bonds, local currency denominated, as part of a much broader, unconstrained bond portfolio. And we're calling them the global bond funds. So they might be managing against a benchmark like WIGPI or some broader measure of global bonds. And you can see that they've been increasing their allocations as well. Now the sample size is a little bit smaller, but it's definitely better than nothing. So I think overall there's a story coming through that whether you're a foreigner who's got to buy this asset or who's really got the choice, is less constrained, all the foreigners have been getting overweight recently. Now, I said that foreigners were important to the South African local currency government bond market. And this chart here, which we see when we land on the sovereign bond market size, structure and investors tab, shows you that. It's central government debt, local currencies denominated only, and it's shown you who the holders are. So you can see that in green, the foreigners are a big component here. And if I just unselect some of the other ones, what also stands out is that over the last year, they've really been buying a lot more bonds. So this is a stock view in local currency. If we look at it in flow terms and we unselect the others, again, we can see there's been some very good buying over almost the last year. This data is the nominal value, but actually we can measure this at market value, and we, noticing that non-residents are in blue now, not green, can see a slightly even more up-to-date picture, again, that buying from the foreigners. So everything's screaming at you that the foreigners have been buying. How are they positioned now? Well, we know how they're positioned as of the end of last month. There is data that we can use to see what's been happening over the last 2 or 3 weeks. That comes at a daily frequency from the Johannesburg Stock Exchange, and I'm going to turn to that next.